Peter Fusaro. He's the chairman and global of, he's the chairman of Global Change Associates. Peter is the founder, as Sheila mentioned, of the Wall Street Green Summit, and we're celebrating the 20th anniversary this year. Peter, how does it feel?
Feels great, Paul.
Good. All right. So bring us up to speed on what you're doing and what the summit is about this year and who we're going to be hearing from.
Well, the summit was envisioned as building community before people started thinking about community. So at the end of this week, 7,000 people would have attended this summit over 20 years. And we have some tools that we will be launching from Connective Earth, which I'm a partner in, to get people involved in community building. It is no good to have an event and then it disappears. Yes, people out there keep asking. We're recording every session. They will be posted to YouTube by June 1st after they are edited. So don't worry about that. We will have it evergreen. It's free. Wall Street Green Summit on YouTube. But the reality is you need to build community. We're going to war on climate change and we need the troops. And so the reality is we're all in this together and folks have to think about it that way. So to me, climate change is real and material. I will not have the argument with anybody of climate deniers. They can go to another room. We need to scale technology rapidly this decade on the three largest businesses in the world. Energy, a $6 trillion business, food, a $5 trillion business, and water, a $3 trillion business. The capital is available. I have done numerous Zoom capital raising calls for the Norwegian private equity fund I'm a partner in over the last year. So much dry powder is out in the capital markets. And if you want to get a 0.5% interest rate bump, be my guest. This is the sector to invest in. What is lacking is knowledge capital. I have spent 25 years mentoring over 300 young people on sustainable finance, and I continue to do so, not even putting out anything. People keep following me, finding me, whatever. We need more knowledge from young people. And I have sat on the board of University of Michigan's Herb Institute for Global Sustainable Enterprise for 8 years and Bard College's MBA in Sustainability. Folks out there, I have a call option on young people. We can get the job done with young people, with older people like myself. I'm 70 and I don't care. I've gotten healthier during COVID, by the way, but we got to work together getting this done. Decarbonization of the global economy is underway, but only by three major energy companies: Shell, Total, and Equinor, formerly Statoil. We need to move this puppy to start getting focused on decarbonization. Now, the United States has now has a 50% greenhouse gas cut by 2030. That is easily done. Looking at the New York Times and the Wall Street Journal the last few days, can't do this, it could disrupt the economy. Baloney, and I'll give you some analogs. In 1976, refiners came into my office at the Federal Energy Administration, which became the Department of Energy, and said, we can't make unleaded fuels, it's gonna be gasoline shortages, please help us. Well, folks, there were no gasoline shortages. And in 1997, when I worked on the Prius with Toyota, the head of advertising came into me and said, Peter, we don't sell sacrifice. We're going to change the technology under the hood. We can do this easily. The United States is the richest country in the world with the most risk capital available, the most knowledge capital available. And if we don't get it done, no one's going to get it done. So the reality today, 2021, we have the policy signals coming out of Washington that are correct. Not this nonsense of climate deniers. Not this nonsense, we can't do this. Not this nonsense, it's too expensive. It's not that expensive to save human lives. Clean air and clean water are entitlements for humanity. And I worked on air quality issues for over 35 years. COVID-19, which was there in the cards. 20 years ago, I worked with Harvard Medical College in Swiss Re on the correlation of infectious disease and climate change, and nobody listened. Last spring, nobody cared. I messaged that again. This is pandemics, plural, and this is climate change and infectious disease. And if you want to put your head in the sand, be my guest. This is going to be part of our lives. Wearing masks is going to save lives, and you better have a big supply of masks because I have a stockpile in my apartment. We're going to have more of this, not less. And anybody who thinks otherwise and runs around is going to be dead or sick or both. The other good news is ESG investors are driving this train. This train left the station. ESG is now seminal. And yes, the SEC will get the rules right and stop trying to destroy a market before it even starts. But we will get this done. In Canada, pension funds won't touch fossil fuel investment, period. That's where we're going, but that's not the solution. I've worked my entire career cleaning up a dirty industry called energy and been very successful at it by putting out ideas and knowledge and pointing capital where to go. And I've been hired by major corporates throughout the world, be they in Europe, North America, or Asia. We have the money. Do we have the wherewithal? If you're going to attract investor interest going forward, you better be walking the walk on environmental social governance. And you're going to hear a lot of that this afternoon, but it's real and material. The carbon problem is now a healthcare problem. 37 billion metric tons, and it's down last year because there was less economic activity. 417 parts per million. When I started this journey, I was at 350. There ain't going to go back to 350, McKibben, ain't going to happen. And 1 degree C in 2019. So we're already halfway there. The bogey for 2050 is 450 ppm, 2 degrees C. After that, it could be awful. I have seen some meteorological studies predicting if we lose cloud cover, we could go to 6 to 18 degrees C. Let's wake up. We got a problem. The house is on fire. We need the firemen. They're here. So major oil companies will be part of this solution. They think long term. They have deep pockets, and they are starting to migrate. Exxon wrote down the tar sands 2 months ago to zero. It ain't going to be produced. This nonsense we're going to drill in Alaska isn't going to happen. It's nonsense. Anwar has been around for 40 years. The Alaska North Slope Wildlife Reserve. We're not going to touch places where it's cost too much to exploit those molecules. Ain't going to happen. Low-hanging fruit is where we go with technology. The world is swimming in oil. The price of oil today is $60, roughly a barrel. Should be $20. We've got so much oil in inventory in Cushing, Oklahoma. We've got so much oil in inventory on tankers. There is no shortage anymore. You know, I was in Bermuda at a hedge fund event speaking, and this guy kept talking about exploration and production risk. I said, sir, I don't think you've heard of 3D seismic and horizontal drilling. We use technology to find things. We know where technology is for molecules of oil and gas. So the world is changing. Hydrocarbon demand, the demand side, is going to start going down for oil and coal, and it's not in 2030. It's peaking now. And every oil analyst on the street still thinks it's going to go up. They're just too lazy and complacent to understand this is the time for the new energy economy. And we got my friend hydrogen, which finally Wall Street and analysts are picking up on. Elon Musk doesn't like it because EVs make pollution, folks. Hydrogen does not. Hydrogen makes water vapor, and you can use hydrogen for fuel cell technology, for power generation. And tomorrow you're going to hear from Keen Yi out of Malaysia talk about storing it like a battery in a solid state. We live in the age of technology. Watch hydrogen. There are hydrogen trains in Germany and France. There are hydrogen ships in Norway and Japan. Hydrogen cars are coming, hydrogen trucks. We need to move onto the hydrogen economy if we're going to make significant cuts in greenhouse gases. EVs crowd out the space, but there are now 100 members of the Hydrogen Council in Brussels. These are corporates. Watch hydrogen. That's the outlier. That's the disruptive technology no one wants to talk about. So where are we? Clean energy has now arrived. 90% plus decline in solar prices in the last decade, 65% plus reduction in wind, and watch out for something called induction wind coming out of Germany with Siemens, no gearbox. So better technology, it is affordable, it's at grid parity, it's deployable around the world. So I'm going to make a term up, like there are food deserts, there are now energy deserts. And Sheila, the number is 1.3 billion people don't have access to the grid. They can do this on a distributed basis on solar. It's happening because it's cheaper. Once you get the cost curve bent, you can move wherever. And now it's competitive to nuclear, natural gas, and coal with less price volatility. Clean energy married to storage is going to rock this nation and the world. And storage is getting there with advanced battery technology. It's not all lithium ion batteries, it's airflow batteries, it's zinc air batteries. There are so much science going into battery technology. And I'd mentioned fuel cells. Fuel cells are a concept that's been around 150 years. It's ready for prime time. Corporate buying of renewables continues to increase in the United States, 100% year-to-year growth. There is no mandate to buy renewables by corporations in the United States. Why are they doing this? Because they cannot attract young people to work in major corporations without doing the right thing, as we say in New York. And renewables are a great investment for pension funds. I just learned this recently. We did an investment out of Norway into solar that now has 35-year power purchase agreement. Power purchase agreement is an old idea coming out of the late 70s. It's bank financeable. That's a strip. It's cash on class, great investment for pension funds. So any pension funds out there, you better start looking at moving into the new energy economy. So clean energy last year was $501.3 billion, according to Bloomberg New Energy Finance, the best analytical service out there. That's 5%. Remember I said 6 trillion. We're not there yet. We got to scale this puppy to $1 trillion a year. Over the past decade, 2.6 trillion has been deployed in renewables, 1.3 in solar, 1.1 in wind. And the largest capital deployers are also the largest greenhouse gas emitters. So it's China number one greenhouse gas emitter. US number two greenhouse gas emitter. The third country is Japan. This event was founded on the idea of transferring knowledge. There are no government people here except one. We are into the practitioner mode, sharing your insight, thoughts, and all your great education with others. So we've got Sean Kidney, and I brought Sean to New York 8 years ago. He's the father of green bonds, and green bonds are rocking. He'll talk about that. ESG data, the good, the bad, and the ugly. There's now 57 metrics for ESG data, and I'm not too fond of SASB with 33 different buckets. Markets like simplicity for replication of trade. Remember that. And we've got ag tech, regenerative economy, energy tech, ocean tech. I'm very excited about the oceans. If anyone has access to Netflix, please watch Seaspiracy. It is the best documentary I've ever seen. It taught me some things about the oceans. We've got hydrogen tech, and then my favorite, AI and sustainability. Everybody likes elephants. We are now saving elephants in the Serengeti from poaching due to the application of AI technology, and Intel came on board. So you're going to hear about that on Friday. And then the beginning of sustainability in mining. I know it sounds oxymoronic, but you know, I worked my career cleaning up one industry. It's now time to clean up the mining industry. You're going to hear about green copper. You're going to hear about green steel. You're going to see a movement, because it doesn't matter if Facebook and Amazon and Netflix have a carbon footprint. Who cares? It's not material. The energy industry is the world's largest polluter, and the mining industry is not, if not second, pretty close. So sustainability in mining is coming. You'll learn about that on Thursday. So why is this happening now? Well, I actually think, and I'm thinking of new words. So millennials and next gen, because I don't know what to call Gen Y, Gen Z, Gen. So I'm calling it next gen. They get it. In my classroom at Columbia University, no one brought a plastic water bottle, including the professor. They car share. I've been on Zipcar since 2004. I don't own a car, and neither do young people. And there's a company called Grover in Berlin that's figured out young people behave differently, and they don't want to own things. So they rent PCs and cell phones, et cetera. Check them out, Grover, growing 100% year to year. Amazing idea. That's the circular economy in action. vegans and meat alternatives. My daughter turned me on to not eating red meat, so I don't eat red meat. So a lot of people don't eat red meat because we had a guy at the summit talking about cows 15 years ago causing greenhouse gases, and they do. So that's another thing that's changed. We're also seeing the advent of social enterprise and impact investing. 5 years ago, I was invited to breakfast by the World Economic Forum to their first meeting on impact investing. I had helped their report, pulled some people together to help them. Sometimes it's better not to have my face out there, have some other people talking. If investing with purpose, impact investing, ESG, this is the time. And you're going to see investors shift their focus. Now, right now, I think the whole world of ESG and impact is $100 billion in funds. It's not 17 trillion or 30 trillion, where all the malarkey, great word by Biden, by the way, of it just can't be. It's the beginning of a market. How could you possibly have $17 trillion in ESG? It's nonsense. It's 100 billion. BlackRock just deployed the biggest amount ever, 4.8 billion in renewables last week. Carlyle did 4 billion in debt last month. The market's small for ESG and impact, and it's going to transform how we invest. And funds are lining up to create this new market, but we're now ready, what they used to say, the takeoff period, W.W. Rustow. I want to thank everybody for joining us. You'll learn a lot. I'll repeat again, everything is recorded. It's free. It's uploaded to the internet. We do use technology here. And thank you very much.